Okay, it's actually really good that you want to talk more about the Elliott Wave theory, because we've still got that in play to a certain extent on the pound yen. Just looking at it on the monthly, so you can see the last few months where we've gone down and left it retraced up, leaving a nice wick. Then we've made a new low, really stretched down to target, which was around 149 on the pound yen. Then it wicked all the way back up into the close last month. So I think maybe the first half of this month, which we've just completed, we had a nice move up. But monthly still suggests that we have this wick to fill, and so there could potentially be further downside. So if we're looking at a monthly cycle where the first few weeks of the month have pushed up, then potentially the second few weeks we'll see it curl back down again, which is often a bit of understandable. It's often the case with price action, especially when we're looking at a month or a longer period of time, and especially during volume being, during these periods where the volume's really low. Does it actually have the legs to get up? And you've noticed that over the last few days it's been very quiet, very slow, and it hasn't actually pushed up, making any new highs, and it didn't take out the previous high. So the wave 4 to 5, let's see if we can stretch this a little bit. What we see is this weekly is going to close bearish, which is a really good sign that there's further downside. So I would be, from yesterday afternoon, where we had the close on the daily bearish candle, which pretty much took out the previous lows. It took out the 152.50. That's given us the momentum, and we've had a nice move up today, this morning, to give us a retracement. But we do look like we are finally looking at least a move down today to around 151.70. And so as part of an Elliott Wave move, bigger picture, if we keep it on a 4-hour, because I was talking about this yesterday and highlighted with some of the other traders the divergence, the lack of volume here clearly seen, and then it crossed over, which was strong 4-hour momentum. So MT strategy, it killed over. We're very much in play. It's come up, broke the 38, pulled back to test the 38, so breaking a retest, and now we're continuing. So bigger picture, what happens is with Elliott Wave is you have a first move, in this case a decent drive down, and there's not really any method to that move, but it is a more pronounced move like this. We have a really good sell-off, followed by a push up, ideally to a 76.4. So we had a big old sell-off, which was about 400 pips, and then over 400 pips, and then we had the 764 retracement. So thereby creating a wave 1, we say, okay, this is the impulsive wave 2 correction, and the idea being here, it shouldn't go up any higher than the 764 really, and it shouldn't start taking out previous highs. It should find some resistance there. Then we know that with the 764 entry, which is what I like about the 764, is that we can get a 764 strategy with an Elliott Wave 3. Now the Elliott Wave 3 is the biggest, and what that looks to do is we take that impulsive move down, the wave 1, we put the fib there, and then we draw it on the fib to the upside there. So we would do it something like, if I get rid of that, and you'll find that what we get here is go here, push it up, then we'd look for a 161 extension. Now with my 161, I've got a 161 and a 176, pretty much as a zone, if you like. That's where I expect the price to come down and hit, which you can see it did. So it's not me making it up. It's showing you exactly what it's supposed to do and how it did it, and that's that's price action for you, which is great. So I'm just looking at 152. What was it? 55. Yep. Is that right? No, that's not right, is it? Just looking at the price now, because it is actually moving really well, and it should give us a decent tumble to what did I say the level was? 151.70 we're looking at. So I mean, even if you were conservative and you took it to 152 or 152 down to 151.80, in any case there is a there is a play here to the downside, further downside on this pound yen. So it's good that we're talking about the Elliott Wave. So you get the best part is the Elliott Wave 3. That's the part that really interests me, because what it's done is it's made itself known. So it's done the wave 1, a wave 2 pullback to the 764 area, which it did perfectly. Looking at multiple confluences, you had 155, nice middle range round number, an institutional level if you like, because it's a midway between 150 to 160. It's a nice round number, and it's sitting there stalling. So for taking a short off there, you want to take it down and you want to just map this journey. But with an intraday kind of trade, you can really milk this move. Trading style, I should say, intraday. So day trading, because what you're basically doing is you can hold a position, by all means hold, but at the same time you want to be also taking some what's this, 152, 150, 180, slight distraction. Exciting times. Yeah, you want to be milking these moves. So you get a move like that, you take some profit if it moves up, because this would have hit a 618. And depending on the time of day and the period, I remember this being a non-farm payroll time of, is it? Let me see, 21st, is that the one? No, here. 29th, no, end of the month. Where is it? Yeah, non-farm payroll. I remember non-farm payroll kind of price action where we had the move going up, done a retracement up, and so bounced off the 618, done a retracement up, which presented another shorting opportunity. So you can really micromanage the waves within the wave, if you like. And to go into more detail with that, you can go online and really look at it and look at each mini wave within a wave, because clearly you can see here the price hasn't gone down in a straight line. It's gone up. It's gone down in legs, in stages. Pullback. So, but understanding the motion and understanding where it's likely to end up and where the end goal remains and when the end target is and all the rest of it, you can capitalize on this move with confidence. Now, obviously, there is a certain element of belief and thinking: is it going to get down here when it's all the way up here? Do you feel like it's going to get there? It's very hard to call that one, but we called it. It's a big deal to call that and to get it on point and to say the reason being because of these fib extensions, because it's an Elliott wave and it's a wave 3, so we're going to get down to 149 no matter how long. And then you saw not only did it get down there, but it bounced off there, which told you exactly that this Elliott wave was in motion. It was in play. The fact that it did that, it's done that. It's not to be scoffed at nor taken lightly, really, because, well, it's done it, and I've just highlighted it and said, look, this is a move, and this is something I've seen play out multiple times over many years. So it's not something I just made up. It's true. It exists. So that's why I find it very powerful when it does happen. You can capitalise on it, and shorting things like pound yen, just being from a personal point of view, that's one of my favourite things to do. I was saying in some of the videos this week that divergence on the pound yen is one of my favourite strategies, because when it extends and makes new highs, I like to short it. So like in any excuse really to find short setups and to short the pound yen is what I really look for. So yeah, Elliott Wave 3. So we've got this Wave 4 pullback. Now, this Wave 4 pullback didn't play out exactly how I would have wanted. We had an inverse head and shoulders. It did hit the target. Generous move down. I did capitalise on these moves. Then I micromanaged each one of these pullbacks. Got in on this, made some money here, back down to the previous low. Then we saw a nice pump up. It gave us more shorting opportunities. So it was always short, which was great to see, great to get involved in. So we can clean that up. We can also get rid of some of these levels as well, and just keep it clearer. And basically, this pullback, you measure where was the high. So the high from the wave 3. It's the wave 3 move basically. For the wave 4 pullback, you're ideally looking for a 382. That's what you're supposed to be looking for, ideally, a 382 pullback as a corrective wave 4. and it's supposed to be the case where price goes down, done a big move down, and we get a bit of a pullback to 151. Would have been a nice place because it was a 38.2 as well. It thought about it. It sat there for a little while. It consolidated. It looked at one point to want to go down, but then they had other ideas, and they've instead driven the price all the way up to pretty much the 764, which is quite interesting because that's given us a play. That gave us a play there. I know we made some money short in this move, and I'll show you for why. But just to go back to the Elliott wave, wave 4. Ideally, it should have been here. It should have been like a bit of like something like this for a wave 4, a textbook wave 4. But if you read up on Elliott wave, nothing is ever going to, it's not always going to be an exact science, and price action is not always going to conform. And right now we do have pound yen short, which is good. We are looking for this 150, 170. Just want to highlight that. Let me just pause this video for 1 sec. So if we go here and we look at what we have here, what's this? Let's go here, let's get rid of that. So let's move that over to there. Oops, no, wrong one. Let's just hold on, pause that. So yeah, interestingly, what we have is the pullback is exceeded expectations. What we were supposed to see is every part of this journey should be something like this, where we have, let's clear that. It should have been something like a pullback, and then maybe some consolidation within the range, something like that, and then maybe complete a wave 5. Could have done it quite neatly, without too much drama. As it happens, this M shape is playing out at a much higher altitude, if you like. It's actually gone up to the 764, which I find really interesting. We stalled around here. We tested this level 3 times, and then we finally curled over and broke. I had to sort of rub my eyes in belief to see, are we actually going to make a move yesterday? And I thought, okay, good. Let's allow it. Let's get down to 150, 250. And then let's see if it can break that. Then I'm interested to get involved and engage, and that's where we are at the moment. So it's kind of cool to say I'm stepping back, taking a break, and then price starts to make a move. So then, like I said, it's almost like I tricked the market into thinking I was retiring, and then now we can get involved. So what's it going to do next? So well, let's assume that all this has happened. It's all played out. Let's take a screenshot as well. And let's say that the second half of the month it's now looking to at least do some M-shape kind of price action. There's money to be made. 764 is good, so I'll get rid of that. Put the new range up. We've got a 764 down here at 150, 170. Makes for a good target potentially. And then we want to look at the bigger picture, and we want to go like this. We want to scrap this, just tidy this up. So you see, I'm fibs. It's really important when using the fibs, because the fibs work with the Elliott wave theory. They work hand in hand. We just, because we're doing it all on one chart, it can get a bit cluttered, a bit messy. So I always try and just tidy everything up and reduce the clutter. I do have separate charts with separate time frames on my other charts, so it's never a problem. But for illustrative, it's important we do this, and you're proactively doing this all the time as well. So bigger picture shows a 38.2 at 150, 150, which ties in with the previous structure. So that's a good downside. There's a good downside target there. It does make for a really good level. So it's definitely worth something to consider. Oh, I'll just adjust the stop loss on that. Yeah, so what happens after the Elliott Wave 5? Well, what you need to do is 4 to 5, or Elliott Wave 5, this move here, is the same measurement as this move, as the Elliott Wave 1. So if you get a calculator, what I do is I get a calculator and we do 15607 minus 15131. So that gives you 476, so 476 pips. So if we said 476 to say, I don't know, 500, so we'll allow for a 470 to 500 move. So wherever this stops, so in this case now that the high is in, we can confirm this and sort of say, okay, 153.44, 153.44 plus the 476 equals, oh, no, it's not plus, is it? We're going down, aren't we? Silly. 153.44 minus 476 is 148.68. So that ties in quite nicely with 148.45, 148.68. So we're looking at, well, we're looking for down here really. That's why, yeah, pretty much spot on. So those waves should be replicated. So ideally, sometimes if the wave 4 only pulls up to say a 38.2, which I highlighted before, then you would extend that and have it coming down here and making new lows, etc. In this instance, it's gone all the way up. So wherever that wave 4 finishes, your wave 5 should be roughly the same length as that, which ties in quite beautifully. So this has got lots of legs and scope and room to really make a pronounced move, a really strong move. There's money to be made potentially on this move. Not to get too excited, but it's been long. We've been waiting for those that have traded this this pound yen. It's something that they've been sitting patiently for many weeks. Sometimes this is what happens, and so patience pays. But you stalk the price, you track it, you have to account for summer volume. But then yeah, this is looking good. So what happens after this? Then you have an ABC correction. So the ABC would be, let's have a look if there is an ABC tool here. ABC pattern, Elliott Wave impulsive, which is 1, 2, 3, 4, 5. Elliott Wave. Oh, here we go. Elliott Wave, Elliott correction wave, ABC. So this is where you get further consolidation. And again, it's worth Googling what is an ABC correction and what are the rules, general rules, because there are a few different ideas, but principle is basically that the move is over and we're going to have like something like this, something like that. It goes into sort of consolidation mode, goes into sort of chop mode. In terms of pullbacks, it could do, in this case, because we are pretty much looking at a double bottom, we could have an impulsive rally up, which could be something like, say that was a low, you put your fibs on again, and you start looking at 38.2, at 50%, 618, all these mid-range fibs as a first impulsive move up. So it could do something as strong as, I mean, from what we've seen with these moves, they've been quite impressive. We could see again an A, and then a 764 drop, of this range. And then this is generally what it can do. It's not rocket science, but what you do is you wait and you allow it. When you see it making a move and you think, okay, I can take a long here to say 150.30s, that ties in quite nicely with the fact that it likes a 30 number, so everything's matching up quite nicely. Maybe hasn't done it yet, but we can sort of predict loosely. But the idea is the same, the principle is the same. What's going to happen? Is it going to go up from here? That's what we're thinking would happen off this move, which would make sense. So I think a lot of people who are traders would agree that a double bottom of this magnitude and this size would be an ideal place for a long. So that would make sense. So then if it is going up, it's a case of where's it going to go, what levels is it going to hit, and then are we going to take some profit off? Well, it would make sense to take some profit. Then what sort of a pullback are we going to get in terms of an ABC? Is it going to be a 50% pullback, a 61.8% or a 764% of this move? And then wave C, is that just going to go like that? And then we're just going to consolidate. So ABC correction will vary. Again, still using the fibs though. So I can't put too much emphasis on this until we get there. But with the ABC move is quite nice because it's a smaller range. Potentially a smaller range. I thought that of wave 4 was supposed to be a small range, but that exceeded expectations and bust up all the way up here, didn't it? So yeah, you've got to wait and see what happens. But in this small range, you could capitalise, you could buy that, and then you could short it back down for a corrective move. Then you can buy it back up if it wants to go and retest and make a new high, something like that. Even you could do a 127 extension, and then just go sideways. So there is that to think about in the next phase. But Yeah, it's good. It's a good question. Let's see what happens with this move. Let's see if we can get a wave 5. If we get the wave 5 move down, again, if it takes 2 weeks, the next few weeks to get down there, that will be good. So we get a little leg down here and it goes back up, and just keep shorting the moves, you know, potentially short, until such time that it breaks and starts looking at these extensions and ties in with the current range. That would be really powerful, really good. There's money to be made within this range if it establishes the range, which I think it is now. I believe it is now doing. It's exciting because it presents money making opportunities. But understanding the price action well in advance and prepping accordingly is obviously key, which, as any trader would have heard millions of times. You know, plan your trade, trade your plan, prepared to fail if you're not. You know, failure to prepare, prepared to fail, and all that. Is basically, that's what we do. We try and stay one step ahead of the game, one step ahead of the market. So that's why we say, you know, I am the markets, and in jest, I'm joking, but it's like I'm looking at the setup. I'm looking at, you know, for potential plays. Why is it? What is going on?